Hey, welcome back. It's Jason Walter here. In today's housing market update, I'm going to be sharing the latest details with you for brand new home sales in the US, as well as mortgage application numbers. I have a lot to share with you today, so let's go ahead and dive right into the video. The US Census Bureau reported yesterday that brand new home sales for April dropped by 5.9%, and that was far below what was expected. In addition, March's sales pace for new houses were revised lower to 917,000 units from the previously reported 1.021 million units. Overall, it was a huge miss for April home sales. However, it's not that surprising when you look at these huge price gains. Prices for newly built houses in April were up 20% year over year, and the median sales price of new houses sold in April 2021 was $372,400. The average price was $435,000. Higher costs of newly built houses have priced out some buyers, particularly at the lower end of the market. A year ago, 45% of new home sales were priced below $300,000. In April 2021, only 27% of new home sales were priced below $300,000. Prices of new houses are accelerating so quickly due to high buyer demand, but also due to rising labor, building material, and land costs. Therefore, builders are raising their prices of their houses for sale. The ultimate question is, when will these high home prices be too much for home buyers? Well, we could have an answer right here because the month supply of new houses increased to 4.4 months, and that was up from 4 months in March. So is this an indication that home buyer demand is decreasing like the mainstream media is telling us? One way to figure this out is to take a look at month supply of new houses so far this year. The month supply is the ratio of houses for sale to houses sold. The month supply indicates how long the current inventory would last given the current sales rate if no additional new houses were built. In other words, when the month supply increases, this means that home buyer demand is decreasing. When we look at the month supply of new houses, they have been all over the place this year. They decreased from 3.8% to 3.6% from December 2020 to January 2021. Then the supply increased in February, decreased in March, and then increased again in April. Here's another way to look at these numbers. So the supply of new houses were fairly flat for the last half of last year, but it's been on this up, down path ever since then. And when we look at the supply of new houses over the last 10 years, we are clearly at very low levels. When looking at April 2021, besides 2020, we haven't seen supply this low since June 2013. So the point I'm trying to make here is because supply has been all over the place this year and we're still at very low levels, at least historically speaking, I don't think we can draw a reasonable conclusion that home buyer demand is decreasing for new houses, at least just yet. What I will say though is when I looked at this table from the US Census Bureau, I noticed that April's month supply of 4.4 months is the highest it's been since May 2020. And if this number continues to increase in the months to come, that could give us a clear indication that home buyer demand is decreasing. But we will have to see. Here's something else to recognize when you're looking at the drop of new home sales in April. New home sales represent a signed contract, not when a home sale actually closes escrow. This is significant because mortgage rates actually dropped in April. They went from 3.4% at the beginning of the month down to 3.1% at the end of the month. So buyers should have more purchasing power when rates drop, right? But home sales actually dropped during this time period. Are these very high new home sale prices slowing demand, or is this more of a factor of a lack of housing supply? When looking at new home sales on a year-to-date basis, they are up 33.7%. That was driven by strong sales numbers in the Northeast, Midwest, and South. However, what in the world is going on in the West because they only increased by less than 4%? According to a recent report from the National Association of Home Builders, or the NAHB, the April seasonally adjusted annual rate of new home sales was the lowest since June 2020, with the exception of a weather-influenced February report. As you can see in this graphic from the NAHB, ever since the beginning of this year, new home sales have been on more or less a downward trajectory, whereas the month's supply of new houses have been increasing. And if this trend continues, this could mean that home buyer demand is decreasing for new houses. I also found another good article on the NAHB's website that I wanted to share with you today. So it stated the following: despite a historically low level of overall housing inventory and solid demand, new construction has been unable to add additional needed supply to the market, resulting in unsustainable gains for home prices. It states in this article that housing starts have been far outpacing sawmill production. So in other words, as you can see on this graphic, since mid-2020, the production from sawmills has been insufficient to keep up with the demand for housing construction. According to the association, the growing gap between sawmill output and housing starts, particularly in 2020, is the reason for the dramatic increase of lumber prices. And speaking of lumber prices, they have come down from their peak of almost $1,700 towards the beginning of May, but we're still well above historic levels. In addition, prices are up about 60% year to date. And before I share the latest numbers regarding mortgage application numbers with you, let me first give you a mortgage interest rate update, because the average 30-year fixed rate mortgage dropped to 3.07%. That's approximately 0.3% higher than the record low that was set earlier this year. Meanwhile, the yield on the 10-year US Treasury note has remained relatively flat over the past month and a half. However, compared to 1 year ago, the yield is about 1% higher. And lastly, according to the Mortgage Bankers Association, or the MBA, mortgage applications decreased in their latest survey. However, the dip of mortgage application numbers was mainly due to a decrease of refis and not purchase applications. For example, the MBA's refinance index dropped by 7% from the previous week, but their seasonally adjusted purchase index increased 2% from 1 week earlier. According to the MBA, mortgage applications decreased last week as mortgage rates increased to 3.18%. Purchase applications increased for the second time in 3 weeks, rebounding after a rather weak April with mostly weekly declines. If you enjoyed watching this video, then please hit the like button. I greatly appreciate that. And also consider subscribing as well. I post videos about how this pandemic is affecting our housing market. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.